Welcome back. So some news came out about the Elon Musk Twitter deal and it's got the stock price tumbling. So what I wanted to do was look at it from like an arbitrage, statistical investment play, value investment, kind of like what we did with Activision with the Microsoft deal, and see if this is a chance to get a really good return in a short amount of time. All right, so let me just run through the article real quick. Elon Musk has put the deal on hold while he awaits proportion of fake accounts. So he wants to know how many bots there are on Twitter, and it's been said that it's 5% for the longest time, but it sounds like he's doubting those numbers. And look at this: the shares fell all the way to $37 in the pre-market. Okay, he is buying the company for $54.20. So 54 divided by 37.10. Holy, that's a 46% return. Wow. You know, it would have been nice to buy then, maybe. Right now, I think the stock price has recovered a little bit. Let me see. Right now it's at 40.3 in the pre-market. So, I mean, still, so what's 54 divided by 40.3? That's still a 34% return. That's still awesome, depending on, how long it takes for that deal to go through. But still, I mean, who wouldn't take that, right? All right, so then we're just going to get one more thing from this article. And you can see here, okay, the implied probability of the deal closing at the agreed price fell below 50% for the first time on Tuesday. So if it was below 50% on Tuesday, I mean, I would think it's got to be lower than that now, right? So what we're going to do is go through a very simple exercise like I did with Activision Blizzard and see if we can find like a statistical fair value. All right, so let me pull up that decision tree real fast. Okay, so here it is. Basically, it's just a one-step thing. It's deal goes through, deal doesn't go through. We're going to assign a percentage to each one, and then we're going to say what the final share price is going to be in each scenario, and then do a weighted average to see what we think the, I guess, like I said, statistical value of the stock is right now. Okay, so deal goes through, like I said, it was 50% on Tuesday before all this came out, so let's just say it's 40% now. I mean, that's arbitrary. If you're going to do this, you want to feel comfortable with whatever numbers you put here. All right, and if that's 40%, that means that this one's a 60% chance. So the question is, if the deal doesn't go through in this 60% scenario, what share price are you left with as a Twitter holder? Well, there's basically two schools of thought, right? So you can say that you think it's going to go to the stock price that it was before all this Elon Musk stuff was announced and just fall back to whatever the market was valuing it there. Or you can look at it from a value investment standpoint and see, what you think fair value for the stock is. And that's going to be what I do because, I don't want to buy anything that I have the chance of holding the bag on unless I know how much the bag's worth, right? Okay, so first though, I want to show you what the stock price used to be. Okay, so what I have here is just a 1-year chart, and you can see before all this Elon stuff, it was riding between $30 and let's say $38 a share. So what's that, like 34 average? Okay, so that's one school of thought, is you could put 34 there. What I'm going to do real quick is just run through some financial data and come up with a really quick back-of-the-hand calculation for fair value. Okay, so what I have here is their income statement, and I just have their pre-tax income for the last 20 quarters. So every quarter going back to the first quarter of 2017. All right, and all I'm going to try to do here is project what I think their pre-tax income is going to be and then multiply it by some, earnings multiple and ratio that to the share price. That sounded way more complicated than it is. All right, so basically, let's see. Let me say, I know they've been all over the place, but I think they're going to be at least $200 million of pre-tax income per quarter, right? So that seems pretty reasonable. So 200 million would be 0.2 billion. I'll multiply that by 4. That gets me a yearly pre-tax income estimate of $800 million per year. So my rule of thumb is usually just to multiply this by like 10 to get to some kind of like market cap target and then ratio that to the share price. But since they're a, quote unquote growth stock, I'm going to say that the market's going to overvalue them a little bit and we'll multiply by 12. So in this scenario, I think the market cap should be like around $10 billion. And in actuality, it's $34 billion with the share price of $45 a share as of close yesterday. So if I ratio that to get to my target share price, I'll divide by 34, multiply by 45. And you can see I think the stock price is somewhere between $12 and $13 a share as fair value if the deal doesn't go through. All right, so I'm saying 12 to 13. The market's saying, like I said, $34 a share is what it was before that deal. If you want to take the average of that, that's fine. I would suggest getting your own number though. Well, let's see. I'm just going to do the average. So let's say 12 plus 34 divided by 2. Okay, so $23 a share. Let's go back to the decision tree. All right, so I'm going to put $23 a share here for the chance that the deal doesn't go through. And then basically all we're going to do is a weighted average. So we're going to do 40% times 54 plus 60% times 23. So let me do that in the calculator. So 0.4 times 54 plus 0.6 times 23. All right, and you can see our statistical value of the stock is only $35 a share, so it's actually lower than what it's selling for right now based on these assumptions. However, that is based on these assumptions, and to be honest, if I was really doing it, I'd probably put like 13 here because that's how much I think the bag's worth. But I am being a little generous given what I think the market valued it at before. All right, but that being said, what if these numbers for the probabilities aren't 40-60? What if they're higher, right? Because if you think Elon's going to go through with this no matter what, because he definitely seems like a man of principle, right? If you think that a couple of spam bots is going to like deter him, I would bet against that, right? I think it's probably more likely that the deal does go through. So let's do that scenario real fast. So let's say like 70% chance it goes through, which would be 30% chance it doesn't. And then let's even adopt my low price target of $12 a share, okay? So let's see, 54 times 0.7 plus 12 times 0.3. And you can see now we're up to like $41 a share that we think it's worth right now. Still not enough margin of safety, I think, for me to pull the trigger on this one. And I really don't like, what I'm left with if the deal doesn't go through. Whereas like with somebody like Activision, I've done a full deep dive on them before the deal even went through. And I think that they're worth, somewhere close to fair value if the Microsoft deal doesn't go through. So I think that makes it a little bit different here, but that's just my take. You might have your own numbers that you want to put here, and I encourage you to do this little exercise. I think that it's super helpful. So if you enjoyed this video, if you want to see more like it or individual deep dives on companies, check out my channel. Thanks for watching.